Hey everybody, Doug Reynolds here, your Sacramento area realtor, and we're like 3 weeks into the coronavirus quarantine stuff. I've been sharing my take from a realtor, real estate agent standpoint, and today I thought it'd be good. I got Matt Gouget. He's a lender, excellent mortgage lender in the Sacramento area, and get him on and just get some insight from him. So thanks for joining me, Matt.
Yeah, great. It's great to be chatting with you, man. It's definitely, a lot of stuff is changing. It's a wild time. This stuff is valuable. Getting out, and talking to each other as professionals, but then also disseminating as much good information as possible. Because trust me, you probably see it as much as I do. There's bad information out there, and so to
Yeah.
help protect people, I think it's good to get out some good info.
Definitely. Yeah. So we're shooting for, I don't know, 20-ish minutes. We'll see how long this ends up happening, but hopefully some people will get some good information out of this. I'll put Matt's information up. I'll do a little edit and put Matt's info up on the video. Hopefully I'll be able to get that done. But what I wanted to do was, you're right. There's a lot of bad information. There's a lot of negative information out there as well. What I've been doing, this is probably my sixth or seventh kind of COVID-19 real estate video I've done here. And I've been sharing from my standpoint. And from my standpoint, I'm seeing a lot of still positive things out there. About 50% of the properties that are going into escrow right now are having multiple offers on them. I wrote 3 offers last week. I got 2 of them accepted. I'm writing another one this morning, actually. Right after we get done here, I'll be writing one up. So there's still stuff going on. You're just not really hearing that in the news. So I'm trying to kind of share, not necessarily, be deceptively trying to say, hey, oh gosh, everything's fine. Not everything's fine, but there's still quite a bit going on. What I'm seeing is the sellers that are freaked out or the buyers that are freaked out, they've backed off. They've pulled their house off the market. They're not interested. But I'm still seeing quite a few sellers that are, I gotta sell, or the house is vacant, or whatever. And it's, yeah, let's move forward. And I've got a number of buyers that are saying, you know what? We'll be cautious. We'll be wise, but its timing is right for us. We've got a job that's secure. We're not really concerned about being laid off or furloughed right now, and actually seeing it as an opportunity where there's a few less buyers out there right now and a little bit less competition. So now's my chance. I'm going to move forward. So that's kind of my perspective. That's what I've been seeing. Why don't you share, Matt, what have you been seeing and experiencing from kind of the mortgage standpoint of it?
Right. And first, to back up your point, thankfully on the mortgage side, we can do most anything from home. And title companies are sending out mobile notaries. They're not signing in office. Appraisers are able to do some drive-by appraisals. There's been some guidance that's been released on that so that appraisals can still get done. And as you know, on the real estate side, inspections can still get done. So transactions are still happening. I think it's important for most folks to know that, because of, the county being shut down and us taking longer to get some stuff from title from the county, it might be a little bit slower. But, business, I won't say business as usual, because like you said, I don't want to be deceptive, but we're still able to get loans done. And so there's a certain segment of the population that they're moving and they need to buy. I think part of the reason that I feel we're a little bit insulated, because in California and Sacramento especially, we have so many state workers. And state workers, they've got to work from home, but they're still working. And so, there's going to be certain buyers that are out of work and not wanting to buy it. But I think state workers feel pretty secure that they have income. They can continue to have income. It's just going to be some time off while they've got to work from home before they go back. So just to speak on mortgage industry changes, there's been so much stuff, and I think it's probably beneficial for the masses that I simplify it quite a bit rather than get into the nitty gritty and talk, mortgage on a granular level. From a big scale, lenders, what they've done is they've changed some guidelines and lending's got a little bit stricter. And it makes sense that in a time of uncertainty where a lot of lenders are having, they don't know if people are going to make their mortgage payments or whatnot, that they're going to tighten their guidelines. And so some stuff out there is the sky is falling, FHA lending's going away, and that's far from the case. What has happened is that certain lenders, and as a broker, I deal with 50 plus lenders, so I can't say any specific, lender. It would take me, hours to go through the different guideline changes between each lender. But, some lenders might have gone from 640 minimum score to 660. Some lenders might have said, we went from a 50% debt to income ratio down to 40%. So a little bit of tightening on the lending side. There's some programs that people could qualify for a mortgage with debt service coverage ratio, and these are bank statement loans. They're called non-QM loans. Those have all but evaporated and gone away. And I did in a video that I put out on my page last week or the week before that some of this stuff isn't that bad. More responsible lending, doing away with some high-risk programs, that's not a bad thing. And I think for guys like me and you who are dealing with 95% of our buyers are stable income, good credit, we're not getting into some of those programs all that often. If anything, it's 1 in 20 buyers, 1 in 25 buyers. Not really affecting the majority of folks right now. The only thing that's really affecting folks from a real estate standpoint, in my opinion, is not being able to go out and view houses, having restrictions on what you can and can't do on the real estate side. But mortgage is still going on. And I think for most mortgage folks, my whole team is working full time and we're working remote, we're working from home. But anything that I did before, none of the stuff that I do, I can't show up to signings, I can't shake buyers' hands, but most of the stuff that goes on, whether it's text message, phone call, email, all that stuff is still possible.
Okay. So what I'm hearing is timeline, ultimately things are still moving forward. You're still doing purchases, you're still doing refinances. Maybe timelines might be tweaked a little bit longer here and there for a few bumps along the way of getting some things and stuff like that. And then maybe guidelines have been reined in a little bit stricter guidelines. Someone with a little bit of poor credit, maybe a few months ago, they could have gotten a mortgage. Now that you've got to really kind of increase your credit score a little bit to a little bit.
Right. Higher. Yeah. On some of those programs, the banks just want to see 3 months of reserves, meaning you've got, a $1,900 mortgage. They want to see $5,700 in reserves after you close. And again, it's a good thing. Protecting clients and having them in a better position before they're to buy. I can't imagine people think that that's a terrible thing.
Okay. So the knee-jerk reaction from the mortgage companies has been, let's get a little bit more cautious. We're just going to tighten things up just a little bit here. We're not going to totally stop things dead in its tracks. We're just going to get a little bit more conservative and just tighten things up a little bit.
Exactly. And for most of the companies that I'm talking to, a lot of this stuff is temporary. For the time being, to be conservative and not write loans that they're going to have trouble selling road, they're going to change their minimum credit score from this to this. They're going to ask for a little bit lower debt to income ratio. They're going to do things like that. And they have to, in a time of so much uncertainty, they've got to protect themselves. So it's understandable.
Okay. So one thing I'm curious about, you don't need to throw out maybe not a specific number, but talk about just interest rates in general, just as far as what's going on. Interest rates are always a fluid thing. They're always kind of changing. But from my standpoint, what I'm understanding is it's even magnified a little bit more. They're kind of shifting all over. And so it's really important to be dialed under.
Well, and it's funny too, because I've seen graphs where you can really see like, holy moly, things are quite volatile. And as you would imagine with uncertainty, just like people's stock market accounts or their retirement accounts, in general, things don't move more than 1% or 2% on any given day. In times like this, where there's all this uncertainty, they might see a 12% one day and then it goes 7% up the next day. And so mortgage rates change every single day. And that's one thing that a lot of people don't understand is you talk to them on March 4th, and then they call you back on March 21st and say, hey, we're thinking about doing this. Am I locked in at the 3.3 that we talked about? Well, one, you can't lock a rate until you're in contract. And two, these things change every single day. The news is that historically rates are still historically low. And just rough numbers, I'll tell you that the first week of March, we saw 30-year fixed in like the 3.1 to 3.2% range. lowest I've ever seen. And what happened was a bunch of different factors. But in 11 days, I think I saw 17 price worsenings at a few different lenders we work with. And so it was, 3.1% on March 2nd. And then somebody called me on March 14th, and that same scenario was all the way up near 4%. And it's funny because for anybody who's been paying attention to mortgage rates, they're like, oh my gosh, a 30 years, 4%. They think it's the highest thing in the world. And since then, things have settled down. The lenders that had too much volume, who were purposely pushing rates up to kind of slow the refinances, have since kind of caught up. Things have slowed down, and they're able to get their rates back in line with where they should have been. And so I've been watching today, over the last week or so, I would say rates have trickled back down, and good credit, just a ballpark figure, probably low to mid threes on a 30-year fix, which is historically amazing. And so they were never 6%, volatile in our world is 3.125% to 4%. I mean, that's a humongous jump in 2 weeks. And for somebody buying a $400,000 house, it's a big swing for financing that much money. But I think that they've calmed down a little bit. And I think as we get back to normal and all the concerns around the world with this pandemic start to ease, it's going to be even more calmed down and back to the normal where they change daily, but they change very little. And smart people on the mortgage side that I pay to subscribe to and I follow agree that we're going to have low rates for the foreseeable future and probably at least the next few years. And low rates means they might stay in that range. They might be 3.25% to 3.75 or 3% to 3.5% on a 30-year fixed is great. And people call me all the time. This is something that people hopefully get some value out of. And they say, what's your rate? And that's it's the funniest question. I almost replied to somebody with, what does a new car cost? Because it's kind of the same thing. Is it an FHA? Is it a conventional? Is it a VA? Are they putting 3% down? Are they putting 20% down? Is their credit score 780? Is it 620? It's going to be different for different scenarios. Yeah. But in general, rates are amazing. And that's going to be something along with opportunities that might come up because, uncertain or fearful. I think on the buy side of things, there's going to be a lot of opportunity for the buyers that me and you work with. And so I'm excited about the next couple of years, to be honest.
Yeah. So we're shooting this on the of April. You're saying ballpark right now, we're kind of in the low to mid threes on interest rates, depending on a bunch of different scenarios.
Right. Yeah. And that's 30-year fixed conventional. The government stuff, FHA and VA is closer to 3. And it's near the lowest it's ever been. It's not the lowest, but okay. A lot of people are waiting for, when's it going to bottom out? It can't get much lower. They're not going to give it to you for free.
You don't know when it's bottomed out until you already passed it too.
Exactly. Yeah.
All right. So tell me a little bit maybe on just a minute or two on what's going on with appraisals. How are you seeing that being slightly tweaked, adjusted, modified there to accommodate, social distancing, all that kind of stuff and everything?
So about 2 weeks ago, as we were starting to shelter in place in a bunch of states, and California was one of those where there was orders to only essential businesses were going to be out and about and doing things. Fannie and Freddie released guidance on appraisals. And the verbiage that was in there was something along the lines of there are alternative means for conducting appraisals. I actually talked to a couple appraisers about this and asked them what they had heard. Basically, they're allowing, when they need it, they can take whatever information they need to gather from county records, from online sources, wherever they need to get it, drive by, take a picture, and do that. But also, a ton of lenders that we're working with on the wholesale side have all kinds of stuff with an appraisal that includes the borrower on a refinance taking pictures, and those pictures are I don't know what the fancy tech wizard word is, but you know, like what time it was taken and where it was taken.
Yeah.
It's inside of their house. They send those in, and it's an appraiser that writes the report, and it's a discounted fee. You take the picture, send them up. So there's a bunch of stuff being done. I really, though, think that this is all going to be so short-lived that it's not going to be necessary. What's also happening is that the appraisal waivers, which means if there's data in the system and the hot file as a whole, good credit, down payment, and there's data within that area that says a 1,600 square foot house in this area, this size lot, it should be worth around $400,000. We don't need an appraisal to prove it. Those are happening more often, and the software is allowing more of those to actually get approved. And so they're doing what they can. I mean, at the end of the day, loans and, mortgage companies, mortgage servicers, the GSEs, they want to write loans. They want to close loans. So figuring out ways, just like the government's trying to figure out how to help small businesses and how to help, people, the mortgage industry is trying to figure out how to close loans. And part of that includes the appraisal piece. And, I've got a handful of purchases where we just had traditional appraisals. Appraisers went out, they wore a mask, they wore gloves. There's some sellers that are, don't want somebody in the house, or they have to make extra arrangements where they're not going to be there, and they ask that the appraiser that comes takes their shoes off and puts a mask on, things like that. But things are still getting done. That's the important part.
Yeah. Just to be clear on those appraisal waivers, we're not going back to 2004, 5, 6, where they're literally driving by 20 miles an hour, snapping a picture and just rubber stamping it. It's something where it's conservatively in a computer system based on the borrower. Usually it's only in a real large down payment scenario, and at that price, then the computer is only approving those in extremely confident scenarios and saying, yes, we have a waiver for this because it is so lined up with everything, we're confident in it.
Right.
What I'm hearing from some appraisers too is they're maybe going out and they're doing the exterior measuring because they need to measure the square footage and get the footprint of the house, taking their photos of the front and backyard, and then they're getting photos from the people living inside, or they're doing even like a FaceTime video chatting, with them and stuff, and getting that in. So people are being creative, they're jumping through hoops, they're figuring things out.
Right. And on the mortgage side, the directions that these appraisers and these lenders are getting is that, yes, we'll accept that stuff because they've got to be compliant and do whatever needs to be done. They're saying, hey, alternative means was the verbiage they used. And so stuff like that is alternative means of getting that appraisal done.
Yeah. Everyone is collectively working together to create a solution for this is what I'm seeing, whether it be real estate or lenders or appraisers or title and escrow even. I'm talking to people every day and I'm hearing interesting creative solutions, but we're getting it done. It's working. We're getting getting transactions to happen and move forward. So I think there's just not a lot of that being shared. It's all, first of all, the media is saying recession. Well, you can't even say we're in a recession until you have 2 consecutive quarters of it already. So we're not even in a recession technically yet. So they're using fear verbiage and things like that. Yes, we might end up being in a recession eventually. A lot of people are assuming we're going to be, but we're technically not even in one quite yet, based on the definition of how that works.
Right.
Well, real quick, we're getting close to time here. Why don't we wrap this up with what's just some general advice you would give to either someone that's thinking about buying right now in this time? What would be some good advice of just think about this or take this step or do that? What would be just some general good advice?
I think I always try to give advice based on how I truly feel. Give genuine advice that I would want to hear as a consumer. And so my advice to folks that I'm talking to recently, if they're buying a house that they plan on living in for 5, 10, 20 years, I, in my heart of hearts, believe it when I say it, that real estate is still one of the best long-term investments. And none of us know how long this quarantine lasts, but what I do know is if you get into a 30-year fixed mortgage, a payment you can afford, you've got a stable job with the state, whatever your job is, if this mortgage payment is comfortable with you, that 5, 10, 15, 20 years from now, that real estate's going to appreciate in value. If it's worth 2.3% less next year or 4.2% less in 2022, then it goes up 7%, then it goes up 4%, then it goes up. Over time, it increases in value. So you pay your mortgage down, it increases in value. As a long-term investment or asset, real estate has proven over 100 years that it's a good investment. There 99% of people that have wealth in this country wouldn't own real estate if that wasn't the case. And so that's important. And from my perspective on the mortgage side, I'm using this time where people are at home to say, lean on the mortgage professional as much as you can and allow us to really educate you and show you exactly what the financing and the mortgage side looks like. Because I know from experience doing hundreds of loans every year, that a lot of folks kind of speed through the process. Fill out an online application, send me their docs. Okay, I'm pre-approved. Can you send the letter to Doug? I want to put in an offer. And as professionals like me and you that truly care, I want people to be comfortable. I want them to understand exactly what the mortgage looks like, what it's going to be like at different price points so that they can make the best decision for them and their family. So now, if you're going to hold off buying for 2 to 4 weeks, or if you're in the house and not able to look at 17 houses this weekend, use this time to really understand the mortgage side because it's important. And think about, okay, $2,200 a month is what me and my family are comfortable with, and I know that, and I'm comfortable with my job. Understand that so that when you are ready to buy, you're buying with confidence. And if you've got a 30-year fixed mortgage in the threes and you're writing off the mortgage interest on your taxes, I mean, they're letting you borrow the money for next to nothing versus, the tax write-off and versus inflation. The money's practically free. And if you believe in history repeating itself, like I said, over the long term, real estate's going to appreciate in value. So, I mean, that's the bullish stance on real estate. And if people, want to take a more conservative approach, okay, there might be some deals to be had. And so, tread lightly if you'd like. I think we've seen some of that in the past where certain buyers, are, not gung they have to buy, but if the right deal presents itself, then they will. Well, those right deals might just present themselves in these next 6 to 12 months. So I'd keep my eyes open if I was a buyer.
Yeah. Okay. So ultimately, I'm hearing you say, lean out, reach out to you, lean on you, say, hey, I'm taking this time to really get educated, to understand what are all these acronyms you're throwing at me here? What are these ratios you're talking about? All these types of things, so that they're really in an educated position, whether it be moving forward during this whole pandemic stuff or when we come out of it. I think there's going to be a pent-up demand when we come out of it. As long as this doesn't last 3, 4, 5 months, if we can make it 1 or 2 months here, I think there's going to be a pent-up demand here. So you're saying just lean on you as a lender to get educated so you really understand the ins and outs of kind of the mortgage process and everything. Yeah,
for sure. I mean, I think educating yourself on the mortgage side helps buyers, go out there with confidence when buying real estate, because I understand it's a big purchase. They should be educating themselves.
Yeah. And confidence is what you want to have when you're making such a big purchase. And what we've seen is still being competition with other buyers. If you have confidence, you can confidently write a really strong offer and beat out those other buyers. If you're nervous, you're just not going to be able to compete in some of the scenarios where you got 2 or 3 other offers and stuff. So, all right. Well, I think we ran a little long. Hopefully this is good information. I really appreciate you, Matt, jumping on.
For sure.
You've been awesome with working with almost all of my buyers from the last 5, 6, 7 years. You probably do 90% of my buyers, and just, I don't get anything from them working with you other than just knowing they're dialed in, they're taken care of. So if anybody's just got any mortgage questions, reach out to Matt. I'll put his information there. And just, yeah, if real estate side of things, feel free to reach out, realestatewithdoug.com, and Matt can dial you in, help you out on the mortgage side of things, get your questions answered. So Thanks again, Matt. And I hope everyone's just staying safe. Make sure to, take that time to get positivity in you, whether it's listening to good podcasts or having some exercise outside or just praying, deep breathing, meditating. Take your time right now. We all need to kind of just maintain our patience and our calmness here so that we can kind of be better for everyone all around as this is going on. So thanks again, Matt.
Thanks for having me, man.
Look forward to giving you a high five and a hug one day soon,
Yeah,
your brother.
very soon. Yep.
All right,
All
man.
right, brother.
Stay safe.
Thanks.
Talk to you
Thanks,
later.
man.
Bye.
Later.